As the SEC remains closed due to the government shutdown, a few potential upcoming IPOs are starting to show signs of life. We'll look at SEC shutdown guidance and the companies weighing their options. In IPO Radar news, Aptera's direct listing, OURA ring raises, Snyk eyes an IPO, and Palmer Luckey is getting into the banking business. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of Access IPOs. We're starting to see some signs of life in potential IPOs. There's no guarantee that they're going to move forward, but we got some guidance from the SEC that will help issuers and underwriters make a decision going forward and how they're going to deal with their potential IPO. There is a path forward for IPOs now based on this new guidance that came out on October 9th, and I'm going to paste a link into the description of the show. So while there's a path forward, these companies are going to have to decide if they actually want to do it or not, and that could come with some risks that they're not willing to take, or maybe the underwriters think it's fine and are going to move forward with these IPOs. So these companies will be weighing their options moving forward, but a few of them have actually taken some steps to enable a potential IPO, and we'll take a look at those two in a moment. Following discussions with a few high-profile attorneys' offices, including one called Davis Polk, the SEC posted some updated guidance to provide a path forward for companies that are mostly stuck in this limbo area where they've already filed for an IPO, but they hadn't updated their terms yet. I'm not a securities lawyer, and I'm not going to pretend I completely understand all this, but I put a lot of this into ChatGPT. I read quite a few articles on it. And as retail investors, it's not really our job to interpret the law or how this is all going to play out. All we want to know is when can we invest in these IPOs? And we still don't know that, but we do have some dates out there that might work for a few of these IPOs. And I'm mainly talking about Navan and Beta Technologies. Navan I profiled a few weeks ago. Beta Technologies I have talked about in the IPO Radar section. Navan is the travel and expense SaaS company. Beta Technologies is the vertical takeoff and landing electric aircraft company. So I'm sharing my screen, this SEC website and this update that came out on October 9th. And the meat of this guidance comes in questions 6 and 7 in this table. I'm not going to read through them, but as I understand it, under current securities law, which dates back several decades, once companies file for their IPOs and it's released to the public, they get feedback from the SEC, and they're receiving feedback for a long time. They file confidentially, then they release it to the public, and it's this part about where they set terms and then move forward with their IPO that's in question here. Remember, Navan and a few others, they filed for an IPO, and then the government shutdown happened after that event. Normally, they would wait some time, they'd get more SEC feedback, then they would set terms, and once the terms are set, then they start their IPO roadshow to kick things off, and about 9 or 10 days later or so, usually the following week, they price the deal, and the deal goes live. At some point, after all these filings, the SEC declares these filings as effective and the company can move forward with their IPO. The way the law is written is apparently if they wait 20 days and they don't receive any comment or a declaration of the filing being effective, then the company can move forward. So what's happening here is these companies can choose whether or not they want to update terms, which is the number of shares being offered and the price range and various other pieces of information that go into the filing. If they update their terms and wait 20 days, they are legally allowed to move forward with their IPOs. There's risks involved with that. The risks are spelled out in this guidance, but certainly the advice they're getting from their attorneys would be spelling this out as well as the bankers and their attorneys. But there is this path forward. What we saw last Friday, the 10th, from Navan, late in the day, they updated their terms and amended their filing and released that to the public, essentially kicking off that 20-day waiting period. Navan, having filed that amended S1 with terms, could move forward with its IPO as early as October 30th. And then just this week, Beta Technologies did the same. They released an amended S1 filing with terms, opening up the possibility for an early November IPO. Now, one of the key technicalities of these updated filings is they've removed something called a delaying statement. It's one of these bold paragraphs that we always skip over when we're reading an S1, but apparently it's very important when it comes to the regulation and the law. By removing this delaying statement, it then enables them to move forward after the 20 days if they want to. Now, the way I interpret these activities is these guys are ready to go public. They want to get the terms out there. They want to get the pricing and the offering out there to the public so they can start taking a look at it. They're ready to go. and they're only waiting on the SEC. So in a way, this puts pressure on the government shutdown and the politicians because they're holding up these IPOs, and now it's a little bit more visible. The other thing is these updates give these companies options. They actually have an option now to go public. And why would they do that without SEC approval or without the blessing of the SEC? I think the main reason would be cost. If they're confident in the paperwork and the filing, they want to move forward with this IPO before the end of the quarter so they don't have to redo everything. The longer this delay is, the more stale the filing will become. They're going to have to update things, and there's a huge cost to that for these companies. And that was a risk they took leading up to the federal government shutdown. Here they are in limbo. So I think these updated S-1 filings give these companies some options where they can move forward if they want to after the 20-day period, or if the government reopens, then they're ready to go, and they just need someone from the SEC to go in there and bless these deals before they move forward. Now, even though these companies have filed their terms and have updated terms and released them to the public, there's no IPO roadshows yet. As I understand it, again, just talking to the ChatGPT, is that putting this information out there without it being affected or qualified by the SEC carries additional risk, and that it's unlikely that even these companies would consider doing that, or their advisors would tell them to do that. Certainly in the framework of these old laws, you don't want to ruffle feathers too much. You want to do things by the book. And so this 20-day period that's now available based on this updated guidance is an option. Will anybody use it? It seems like it's untested waters. Maybe going back in history, there's been a time when it's been used, but at least in recent memory, certainly nothing I can remember, it hasn't been used. And so it does seem like it would be a risky bet or a risky thing to do for any of these companies, yet they've left their options open. We talked about Navan and Beta Technologies have done this. The other two that I'm watching are Wealthfront. That was the topic of last week's show, episode 31. And Once Upon a Farm is on my upcoming IPOs list. Those are the next two that we'll see if they decide to complete this maneuver where they update their terms and release the filing to the public. Aside from those, again, these were the ones that were in limbo. There were supposed to be other companies filing for an IPO, and the Edgar system on the SEC website is open, so they can file things, but they're not going to get that feedback. The government shutdown, it's now 16 days into it. I'm recording this on October 16th. There was another vote yesterday that failed, so there's no signs of this shutdown ending. You can bet that any company that was going to think about trying to get their IPO in before the end of the year has scuttled those plans and is moving on to 2026. Medline is the big one that we were really excited about, and that one's probably not happening. What advisor, what underwriter in their right mind would advise a company like Medline to move forward with its IPO when it could probably just wait until 2026 and go there? And who knows how many of those companies are lined up who are thinking about IPOing at the end of this year or are planning to IPO at the beginning of 2026. We hope there's a lot of them, and as long as the market holds, there's going to be a lot of them. But as I've stated in previous episodes, the IPO market is probably dead for 2025 unless one of these companies decides to take this risk and move forward with an IPO, which is on the table. But otherwise, we may not see any IPOs for the rest of the year, at least any high-profile IPOs that are on my IPO radar list. There might be some smaller IPOs here and there, but the ones that I profile are late stage usually and pretty high profile. People know the names of them. And as far as I'm concerned, they're going to be done. But this SEC guidance does open up a door that could be interesting if a company decides to use it. Let's move on to IPO Radar news. Well, the government shutdown has slowed down the IPO volume. We are seeing the unusual amount of information coming out of the pre-IPO companies and venture capital world. Those are the stories I highlight in this segment of the show. These are companies that I've been following for some time or recently started following them, but these are companies that we're hoping will IPO at some point or go public or have some sort of an exit. And the first one on my list, I have been profiling this for a while. It's about to have an exit and it's about to start trading on the NASDAQ, but it's not technically an IPO. And people on Twitter are quick to point this out. Aptera Motors is a solar electric vehicle company. And today, Thursday, October 16th, when I'm recording this, the company is going to conduct a direct listing. This is not an IPO, but essentially from a retail investor perspective, it's going to start trading publicly. They're not raising any cash. They haven't hired an underwriter. They're simply taking the existing shares that are already held in a lot of individual investor hands because this company did a lot of crowdfunding campaigns. So these individual investors, their shares shares will be trading on an exchange and they will be free to buy and sell, as will the executives. A direct listing is an unconventional way to go public. We have seen this from bigger companies. I think Coinbase did it, and other companies have certainly done the direct listing. But Aptera Motors is doing this for their shareholders, get their shares to be liquid. So there's going to be this direct listing. It's going to happen today, Thursday the 16th, and Aptera is going to ring the closing bell on the NASDAQ. And after today, the shares will trade under the symbol SEV. They had a town hall meeting or sort of a retail roadshow type of meeting on YouTube a day or two ago. And so you can go out there and check that out if you go to the Aptera Motors YouTube channel. They also announced that they're executing a $75 million equity line of credit facility with affiliates of New Circle Capital. So Aptera will have the right, but not the obligation, to issue and sell from time to time up to $75 million of its Class B common stock at its discretion, effectively providing a way for them to raise money out of this event, or at least after this event, but not raising money through the IPO. So it's a very unconventional way to do this, and there's been a lot of explaining going on by the company and through the filings and trying to figure out what's going on. And I've followed the story to some extent, but what I know for sure is there's a lot of very enthusiastic car owners and car enthusiasts and investors who have ordered the car, invested in the company, and are very excited about the future of this company. From everything I hear, the design is very efficient. So it's not just solar, but it's electric, meaning you can charge it first and then you go out on the road and you get the solar energy recharging the battery. It's highly efficient. It's highly safe, even though it looks like it's going to crack on the road. It's a safe vehicle. And they have 50,000 orders for this thing. The problem with the company is they just haven't started manufacturing them. They say in the S1 filing that they're pre-revenue, and the manufacturing just hasn't scaled up yet. So why are they deciding to do this now? I don't really understand why this company would go now. They don't have funds to ramp up manufacturing to deliver these vehicles. They do have this credit facility. They say they're going to be using it strategically. I worry that this company being public is going to be scrutinized pretty heavily by Wall Street and shorted. And I worry about early investors who have a stake in this company, who believe in the mission, who believe in everything about these cars and love the cars. That all can be true. A car can be cool. A company can have great values, but you can also lose money investing in a kind of company like that. Now, Aptera raised most of their money from crowdfunding. And these crowdfunding laws were really designed for smaller companies, but a handful of these companies have raised and raised and raised from crowdfunding. Boxable comes to mind is another one. Miso Robotics is another one. Energy X is another one, a lithium company. And so Aptera, to my knowledge, is one of the first of these crowdfunding companies who's raised a lot of money from the crowd to go public and be subjected to the scrutinies of Wall Street. You also have these long-term investors who have been waiting a long time for liquidity, and when they get their chance, they may sell it. Some of them may buy shares. They may buy more and prop up the price of this company. We just don't know. But this is a company that's not manufacturing cars yet. At least they're not scaling up the manufacturing. And we know from Tesla and from Rivian that the manufacturing part is the hard part. Building prototypes and designs and all this cool stuff that happens with the cars, that seems like it might be a little easier to do, but once you're trying to scale this up, that means you have to invest in robotics and plants, and they're going to need a ton of capital for that still before they can start delivering early cars. So for those of you who have commented on my posts or who have watched the show when I've talked about this company, I'm really with you. I really hope that your investment pans out over the long term, but understand that this is risky business. This is a company that has interesting values and a cool car, but that doesn't make it a great business. And this unconventional way to go public at this strange time, at least in my view, is a risk in and of itself. And it's also potentially indicative of some of these other companies that want to move from crowdfunded private to public. So I'll be watching ticker symbol SEV today, but I'll be doing so from the sidelines. Just a quick update here at 1:52 p.m. Eastern Time. Aptera stock opened around noon for trading. Looks like it opened up near $20 a share and immediately cratered. Stock is down to $4.20 a share at this hour, and it's been halted multiple times. I saw reports on Twitter of investors who were trying to liquidate their shares on ComputerShare, and they were not able to. Somebody is selling, and there's a few buyers down here at the bottom, but not a good look for Aptera Motors. Hopefully it's not representative of all crowdfunded talented startups who try to do this. But when you're a company without revenue and without enough money to manufacture the product you want to sell, the product you've been working on for nearly a decade, public investors aren't going to be interested. It's just not working here. So disappointing opening if you are an Aptera Motors investor. It probably wasn't ready to begin trading on the exchanges. OURA Health, the maker of the OURA Ring, that's a medical device, a smart medical device you wear on your fingers. They've raised $900 million from Fidelity. We got an article back in September 22nd from Bloomberg. It said OURA Ring was raising money. The Series E says it was raising about $875 million of a Series E financing round, valued at around $10.9 million. And I was going to talk about this on the show, but I didn't get around to it. I think there was too many other topics going on. But this is a company we've been watching for some time now. It's a Finnish company. It's from Finland. And it was really trying to with the tech bros, early adopters who were into this device. It's great for sleeping. It's great for tracking your body metrics, similar to an Apple Watch, but on your ring, a little bit less invasive. So we got a little bit more detail this week on the round that we heard about first in late September. And it's that Fidelity is leading this fresh funding round. They've raised $900 million from Fidelity, with participation from a new investor, Iconic, which is a top-tier venture capital firm, and contributions from Whale Rock and Altretus. The company said that this funding will value it at approximately $11 billion, which is what we heard last month. The company told TechCrunch that it plans to use the new funding for AI and production innovation, including new health features, and improving its global distribution. It said they've sold over 5.5 million smart rings since its launch. I saw these rings in Costco not too long ago. You could actually stick your finger into some of the sizes to try to figure out what your size was, and you could buy it there. I have an Apple Watch, so this isn't really something I'm interested in, but an $11 billion valuation is very significant. And then this late-stage funding round from Fidelity could be a sign that it's moving forward with an IPO. Remember last week we talked about Cerebras. I think it was last week. And Cerebras was bragging about how they got Fidelity on as a late-stage investor and how Fidelity is the company you want to be investing in your company as you move from private into the public markets. We know Fidelity gives IPO access to investors like you and me who have accounts and who are eligible. Fidelity taking almost $1 billion stake here may be a sign that this company is thinking about moving forward with an IPO, considering that Fidelity is this prestigious partner. And OURA Ring at an $11 billion valuation, we're now talking a pretty significant valuation. Usually we want to see a company at about the $5 billion valuation range or above. So OURA Ring being at $11 billion and having some pretty high profile VCs investing into that deal could give them confidence to move forward with an IPO. It doesn't say anything about an IPO, and there was nothing leaked about an IPO, but this is purely me being speculative and being optimistic because I want this company to be public. And we've seen some Scandinavian companies go public in the US, Klarna most recently, certainly Spotify. OURA Ring seems to have a pretty big presence in Silicon Valley. So this is a big confirming round that doubles the valuation going back to last December 2024. It was valued about $5.2 billion during the Series D. This is the Series E funding round now at $11 billion valuation. Very cool company, very cool device. Haven't tried it myself, but maybe if the price comes down, I'll think about it. I'm pretty happy with my Apple Watch at this point. One feature that I'd love to see from this kind of device is to check blood sugar. There are other ways to check blood sugar, but they're a little more invasive, like the finger stick or a CGM, like a Dexcom or a Freestyle Libre. But if one of these device companies could crack that code of figuring out blood sugar through some kind of optical device through the skin, whether it's Apple Watch or OURA or Whoop, we'd love to see that, and that would be an incredible benefit to society. But as far as I know, they're not able to do that yet, and that's not really in the pipeline. But as an investable company, another device company, a hardware company, this is one to watch. So we'll keep an eye on that for 2026, maybe 2027. And if markets hold up, maybe this Fidelity purchase is a sign that it's moving toward an IPO. We'll look for reporter leaks from Bloomberg and from other sources to see if they'll be moving forward. This next one's kind of interesting. A company called Snyk, S-N-Y-K. They've been on my radar for some time now. They talked about a potential IPO way back in 2021. They're one of these companies that missed that boat in 2021, said they were going to IPO in 2022, and then the markets weren't allowing IPOs anymore. So one of dozens of companies that aspired to IPO in 2022 but missed the boat. CEO Peter McKay talked about a potential IPO in February of 2024. There was talk of preparing for an IPO in January of 2024. So this company has been aspiring to IPO for quite some time. It's been on my upcoming IPOs list as well, though it didn't make the top 10 last year or this year. But an interesting article came out on October 1st about Snyk that said, cybersecurity startup Snyk considers buyout interest as IPO plans stall. This was from Corey Weinberg at The Information, Katie Roof at The Information, also Kevin McLaughlin and Valida Powell. So this article wasn't that interesting to me other than to say, oh no, we have another company that's thinking about a buyout, kind of like Wiz, instead of an IPO. We'd prefer to see them go public. But as I was looking around this week for stories to cover on this show, an article came out on October 9th from a website called Semaphore. And the article is called IPO-Bound CEOs See the Perfect Storm to Go Public. Will it hold? It's by business reporter Rohan Goswami. And scrolling down, there's a quote from the CEO of Snyk, Peter McKay. So let me read you the quote in this article. It looks like they had access to the CEO, and here's what he said. So there's a huge appetite from public investors to buy into IPOs, said Peter McKay, CEO of Snyk, a Boston-based cybersecurity firm that has been eyeing a listing since at least 2022 and is now moving ahead. The company, which has raised more than $1 billion from investors, including Qatar Investment Authority and Tiger, has fielded interest from strategic acquirers, but continues to plan for an IPO in the next few months, McKay said in an interview. Investors want to see the window open, he added. I think they're trying to convince companies like mine to go public quick. So buried in this story that doesn't even mention Snyk is the Snyk CEO pretty much saying, we're moving forward with this IPO, sort of contrary to what was said in The Information just 9 days prior. That Information article a few days earlier does say that the IPO market is humming, but Snyk's potential offering has stalled. Its revenue growth slowed to 12% in the quarter that ended in June. It says the Boston-based company has been talking to potential private equity firms about a buyout, but Snyk rejected a proposal that was less than half of its private valuation, according to people familiar. It goes into Lacework. Lacework was another company that was private and got acquired. Someone says there's decelerating growth and it's becoming a crowded space with companies like CrowdStrike and Wiz. So it does say in this Information article that some pre-IPO businesses like Snyk pursue a dual track, evaluating acquisition offers while taking strides toward an IPO. So at the start of 2024, Snyk was drafting its IPO prospectus. It plans to take advantage of renewed market conditions and go public next year if it does not receive an acquisition offer, according to one of the people in the group. So this Information article did talk about Snyk and how it's moving toward an IPO, but if you don't have the subscription to the Information, or if you can't read what's behind the paywall, then all you have is the headline, and the headline just says, hey, we're looking at an acquisition. So it seems like the CEO, Peter McKay, felt like he needed to go to someone and clarify a little bit to say, hey, we are pursuing an IPO. We're also talking about acquisitions, but if they're going to get lousy offers from private equity firms, then they're going to take that public route to maximize value for their existing shareholders. We'd like to see it go public because it's another cybersecurity company in the public markets that's going to grow into our index funds and 401ks. And if we want that option to invest, it's out there. It's much better than going to a private equity firm where they're just going to leverage it up and maybe drop it on the public markets in a few years. So Snyk looks like it might be one of our upcoming IPOs for 2026. I'll move it up the upcoming IPOs list and probably highlight it at the beginning of the year when we're evaluating which companies we expect to see moving forward in 2026. Last story of the day is a company called Erebor, and you may have heard of this company or not. Certainly people in the VC world know about it. It's a bank. It's not quite a bank yet, but thinking back to the Silicon Valley Bank debacle when that organization crumbled, and a lot of startups that used it were kind of left out in the cold, and some of the other startups out there had to pick up the pieces. Well, back at that time, Palmer Luckey, founder of Anduril, founder of Oculus Rift, the virtual reality company he sold to Facebook, Anduril, the really top-tier startup defense company that a lot of people really want to invest in. They can't yet because it's still private. Palmer Luckey is well connected with Peter Thiel and John Lonsdale of 8VC. Peter Thiel, of course, from Founders Fund. So Palmer, I guess, came up with this idea after the Silicon Valley Bank failure that there was an opportunity to start his own bank. And when they started filing paperwork out there, they have this name called Erebor. And if you look up Erebor, it's a reference to a J.R.R. Tolkien novel. It's known as The Lonely Mountain. So when people saw the name Erebor and the reference to J.R.R. Tolkien, they immediately went to Peter Thiel and Palmer because Anduril is named after a sword in the stories, and Palantir is also taken from Tolkien lore. The news that came out Wednesday is that the U.S. approves the new bank backed by billionaires with ties to Trump. Target market for Erebor will be businesses that are part of America's innovation economy. So I've written about this Erebor because when you have a startup with the pedigree of these founders like Peter Thiel and Palmer Luckey and John Lonsdale, there's an automatic premium to that business. And you're going to get VC investors who just want to invest in these guys. Palmer Luckey, if he has an idea, he's had 2 successful ideas already. Early investors want to be a part of that. And so Erebor is a stealth mode digital bank. He's got several co-founders and partners who are going to be part of this. But the idea was conceived after the collapse of Silicon Valley Bank in 2023. And Luckey and his investors identified a gap in the market for institutions willing to take risks on these tech companies and crypto companies especially that traditional banks aren't going to want to transact with or to have them as customers. They just see them as too risky. So reporting indicated that Erebor had initially sought a funding round at a $2 billion valuation and that it had applied for a national bank charter. And the news that came out this week is that that bank charter has been approved, or at least initially approved, which is a good sign that it will be approved. The regulating organization in the government is the Office of the Comptroller of the Currency, the OCC. It says they announced conditional approval for the chartering of Erebor Bank. Of course, the government's closed, but somehow somebody is approving these guys who have contacts with the government. We know Peter Thiel has long connections to J.D. Vance, so it seems like Erebor found a way to get their charter conditionally approved. And it says here that the company aims to serve the innovation economy. And what that really means is that startups, anybody who's anybody in Silicon Valley, if you're working with Peter Thiel at Founders Fund, if you're working with John Lonsdale at 8VC, and you're an early stage startup or mid-late startup, they're going to push you toward this bank because they've invested in it. It also could mean that Anduril is going to move all their banking to Erebor. And certainly any other startup in the fintech world, crypto especially, who have special needs that may not be served by the Wells Fargos of the world or the JP Morgans that don't want to transact with them. This bank will be stood up and is going to be getting clients in Silicon Valley. So even though this bank is essentially in stealth mode, it's going to be a big business in the near future. This hurdle is just the first one, getting that bank charter. It's going to have headquarters in Columbus, Ohio, so that's good to see it not so much in Silicon Valley around all the tech bros. It's in a smaller town, Columbus, Ohio. Maybe there's some regulatory reasons for that, or maybe it has to do with some of the politicians they're involved with. There will be an additional office in New York, but it's going to be a digital-only customer service bank, marketing all of its products and services via smartphone app and website. And I'm reading an FT article that said stablecoins are expected to be a significant part of the bank's operations. So Erebor getting approval so fast is a reflection of its extremely conservative business plan, the person close to the launch said. The person added that Erebor was not going to be a wacky techno-crypto bank. So Palmer Luckey and Erebor moving forward as the next startup bank that's going to be based in Ohio, New York, but we know that some of these big companies are going to be using this banking service. It'll be interesting to see what the business model is and how it varies from a traditional bank, bringing in stablecoins, bringing in crypto. Who knows what their ambitions are? We won't really know until we see a website and we start seeing the business in action. But with these backers, this Midas trio, Palmer Luckey, Peter Thiel, John Lonsdale, certainly one that we're going to need to keep an eye on. That's all for the show this week. If you like what you're seeing here, give me a like or a follow wherever you follow my podcast or the videos that I create here. Then head over to my website, accessipos.com. Sign up for my newsletter. You get a free download. It's called The IPO Process. It's just a one-pager PDF that shows you how startups go from startup to IPO and afterwards, all in one page. So it's a fun little read if you want to check that out. And if you want to up your game with like-minded investors who are accessing these deals, both IPO deals and pre-IPO access to some of these companies, then join the Access Club on Patreon. That's patreon.com/accessipos. It's a free 7-day trial to join, and you can cancel anytime. It's only $5 to join at the baseline level, or $10 you get some bonus content in there. And if you're curious about what we do in there, it's a lot of chatting about upcoming IPOs. It's asking questions to me, asking questions to the community. And then I provide some bonus content, which includes a lot of news that I don't cover here on the podcast. I put it into a weekly post there. And then I update people on what's going on in the secondary market. So if you're interested in pre-IPO deals versus just waiting for the IPOs to come out, it's a great place to learn about what's happening in the pre-IPO markets, particularly which sectors are growing. AI, of course, is growing, computing, fintech, crypto. And then what are the industries or sectors in the pre-IPO markets that are sort of flailing? And I think SaaS is one that people aren't as excited about anymore. Certainly climate tech doesn't get a lot of attention either. Doesn't mean they're bad businesses, just means that that's where the venture capital money is going, to AI versus climate. I'm sure there's opportunities everywhere, but you know how AI is right now. It's just really where the money is going. So head over to patreon.com/accessipos, give it a try and check things out. That's all for the show. Thanks for listening. Thanks for watching, and I'll see you next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S-1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.